Welcome to The Explainer. Today, we're diving deep into the absolute heart of the global financial system. We hear the name practically every single day, on the news, in movies, constantly in talks about the economy. But how often do we actually stop and think about where it all came from? We're going to strip away all that complex jargon, the flashing digital tickers, and those towering skyscrapers to look at the raw mechanics of how this massive system was actually built. So what if one single street in New York literally created the modern financial system? Crazy, right? Because today, when we say Wall Street, we usually aren't talking about a physical place anymore. We're talking about this abstract, monolithic concept of wealth. We think of massive banks, hedge funds, and billion-dollar corporate deals. It just feels like this untouchable, complex giant. But the truth is, it didn't start that way at all. It started with a very real, very physical street in a rapidly growing American city. Part 1. From Tree to Trading Floor, the 1792 Buttonwood Agreement. Okay, let's transport ourselves back to the late 1700s. New York isn't the sprawling, neon-lit metropolis it is today. It's a bustling, relatively small, but rapidly growing port city. And right in the middle of all this burgeoning economic activity, a very specific meeting takes place involving exactly 24 people. Just 24. Imagine that. It didn't take an army of economists or a massive government mandate to spark a global financial revolution. It literally took 24 merchants and stockbrokers who looked around and recognized a huge problem. Trading was chaotic, it was disorganized, and honestly, it lacked trust. They needed a structured way to buy and sell securities. So in 1792, these 24 individuals got together and made a pact. And that crucial pact was the Buttonwood Agreement. Legend has it they actually signed this document under a buttonwood tree, which is a type of sycamore, right there on Wall Street. This simple, hyper-localized agreement essentially created an organized marketplace with set rules for trading securities among themselves. They were laying the literal, foundational blueprints for what would eventually grow into the New York Stock Exchange. It's a pretty profound reminder that massive systems often start from incredibly humble, practical solutions. Part 2. Fueling America's expansion, powering a growing nation. You see, Wall Street wasn't born a giant. It grew entirely out of necessity. As America started looking westward and began to industrialize, the sheer scale of ambition completely outpaced the amount of cash people actually had in their pockets. The nation was expanding rapidly, and while expansion requires capital, railroads were desperately trying to lay tracks to connect the vast expanses of the country. Massive new factories were springing up to manufacture goods at a scale never seen before, and banks were heavily increasing their lending just to keep up with the pace. Suddenly, the economy demanded immense, unprecedented amounts of money to fund these huge projects. A single wealthy individual couldn't just fund a transcontinental railroad all by themselves. And this brilliantly illustrates the core function of Wall Street stepping in to solve that exact capital problem. It's really an elegant three-step cycle. Step 1, ambitious businesses need vast amounts of capital to expand. Step 3, everyday people and institutions, the investors, have money they want to grow, hoping for a return. And sitting right there in the middle, Step 2, Wall Street. Wall Street became the crucial connector. It was the essential hub where those growing businesses could meet the people willing to fund them. It was basically the ultimate matchmaking service for the American economy. Part 3. Panics, crashes, and rules. The trials of a growing system. Now, as with any massive engine running at top speed, things inevitably break down. In the early days, Wall Street was largely unregulated and incredibly volatile. Take 1907, for example. A massive financial panic triggered brutal bank runs and a severe credit crisis. And here's a wild fact for you. There was no central bank back then. No Federal Reserve. The system was only saved because private financier J.P. Morgan literally locked other bankers in a room and organized a private bailout to stabilize the country. Recognizing that relying on one guy to save the day wasn't exactly sustainable, the government created the Federal Reserve just 6 years later in 1913, officially making Wall Street part of a much larger state-backed financial machine. But the biggest trial was still yet to come in October 1929, when stock prices completely collapsed. The fallout from that 1929 crash permanently changed Wall Street's reputation. It wasn't just a bad week for a few wealthy brokers. It was an absolute catastrophe that helped trigger the Great Depression. The economic devastation rippled right out to Main Street. Millions of everyday Americans lost their jobs, countless businesses unable to secure capital or sell goods permanently failed, and banks, which had tied up their depositors' money in the market, entirely collapsed, wiping out life savings practically overnight. The whole system had broken down catastrophically. In response to this unprecedented disaster, the government stepped in to impartially stabilize and fix the broken mechanics of the system. They quickly realized the engine needed guardrails, so they rolled out sweeping new financial regulations. Securities markets, which had once been a bit of a free-for-all, became heavily supervised. Strict new rules were imposed on how banks could operate and exactly what risks they could take. And crucially, greater legal protections were granted to everyday investors to rebuild that lost trust. So Wall Street didn't disappear after the crash, it was just forced to evolve. Part 4. The digital transformation from paper to pixels. Fast forward a bit. After World War II, America entered an era of rapid expansion. Millions more Americans began investing, and Wall Street became deeply woven into the global economy. But the next massive leap wasn't about a new regulation. It was about a new tool. The age of computers had arrived. For decades, trading meant humans standing shoulder to shoulder on crowded exchange floors, swapping actual paper certificates, shouting orders over one another. It was chaos. But today, those physical floors are mostly ceremonial. The real trading happens on electronic systems and massive server farms, moving billions of dollars across global financial markets in absolute fractions of a second. The physical street has literally become a digital network. Part 5. The core system unchanged. Same DNA 250 years later. The technology is completely different now, for sure. The speed is incomprehensible compared to the 1700s. But underneath all of that flashing digital armor, the fundamental DNA of the market remains completely identical to what those 24 merchants sketched out in 1792. Wall Street isn't just a street anymore. It is a living, evolving system. It's a mechanism that has been stress-tested and built through nearly 250 years of wild economic booms, devastating crashes, strict regulations, daring innovation, and immense risk. The physical location is just a symbol now. The reality is the mechanism itself. And hey, this isn't just abstract history. Every single time you open an app on your phone and buy a fraction of a stock, or automatically invest in an index fund, or even just have a portion of your paycheck contributed to a 401k or a retirement account, you are actively participating in this exact system. You are stepping right into the modern version of that same marketplace that began with a simple agreement under a buttonwood tree. You are the investor, providing capital, looking for returns. It's all connected. Which brings us to this incredibly powerful takeaway from our sources today. Quote, "The history of Wall Street isn't really the history of one street. It's the history of how America learned to turn capital into economic power." That perfectly summarizes this amazing 250-year journey we've been on. It's the story of creating a machine that takes raw financial resources and transforms them into the railroads, the factories, the tech companies, and the entire global economy we live in today. So the real question isn't whether Wall Street will change. If we've learned anything today, it's that it always has and it always will. The question I want to leave you with is this. As technology accelerates even faster and the world becomes even more connected, what will the next transformation